You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NiShacks.
Hi, everyone. Good morning, good afternoon, good evening. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is the esteemed Lars Jensen. Lars, how are you doing?
Good morning. Great, thanks.
Where are you calling in from?
Today I'm calling in from Portugal.
Portugal. Nice. That sounds awesome. Are you there for business or pleasure?
No, a bit of both. A bit of pleasure over the weekend and now work here today at a major conference event.
Nice. Good. All right. So we've had a pretty busy week. If you are anyone with access to the internet, you've seen the internet's just been blowing up with news about the tariffs, potential trade war. So we have a lot to get into today. But maybe we should start first with market updates.
Yeah, I mean, if we look at the market updates, and again, let's try to keep the tariffs out of it here for a second. If we look at some of the latest spot rate data, and of course, they were not quite influenced by the tariffs yet. We'll see that later this week. But they still appear weak. If you look at, say, the WCI index, it is still down. The SCFI somewhat flatlining down. It did show a little bit of an increase on Transpacific to the tune of $100, $130 per F. But keep in mind, the carriers had announced GREs of $1,000 or more. So a $100 increase basically means yet another fake GRI. Keep in mind, the carriers have been pushing these GRIs. They tried in March, they tried now in April. Now they're already announced they're gonna try them again in May. But for now, the market actually still appears to be weak. Question obviously still is, why is it weak now? Hopefully this should, from a carrier perspective, change a little bit here during April as they're ramping up blank sailings. And again, let's hold the discussion on what the tariffs might do on that. But they've already announced a bunch of blank sailings. That was before the tariff war started in earnest. But if I look at the new demand data that came out from Container Trade Statistics covering February, demand doesn't look all that strong globally. It's still growing. I think globally we are up a couple of percentage points, but it is not as strong as what we saw towards the end of last year. Now, of course, if we measure TEU miles, it's a steep drop simply because now we are comparing apples to apples. We are going around Africa now. We went around Africa last year. So these extreme growth rates of 25, 30% so last year is back to something that you could say is normal, but a global increase of only a little over 2% is actually below where we ought to be. If we look into some of the trade lanes, it becomes even more interesting. Again, I'm looking at January, February combined because we have to do that due to the changing nature of Chinese New Year. Yeah. The Asia-Europe trade was up 6%, which is healthy growth, but not as much as we saw last year. Trans-Pacific up 7%, which is again a decline compared to where we came from. Not all of that is good, but maybe really worrying here. Backhaul Trans-Pacific. January, February, North America to Asia volumes are down 13%. That's really a steep decline of the North American exports. If I look beyond purely the Trans-Pacific and look at all North American exports, so everything that goes out of the US, and Canada. If I look at the export volumes and compare them to the magnitude of the imports, exports are down to amounting to just 44% of the size of imports. And to put that into perspective, where were we before the pandemic? Before the pandemic, exports accounted for 59% of the imports. So this is a drop from 59 to just 44, almost a free fall over the last 5 years. So whereas North America continues to grow on import, it doesn't even grow slowly on exports. Exports are in downright decline, have been for several years when we look at the volume cargo being moved.
Is there a reason behind that?
Well, some of the reasons is that apparently US exports have become less competitive. And without putting just one cause on it, I think one of the issues playing into it could very well have been some of the tariffs that China put on US exports as a consequence of the first trade war that Trump started. That could very well be one of them. Keep in mind, one of the major export commodities is agricultural products out of the US to especially China. And the first time Trump was president, he launched a much smaller trade war compared to what we're seeing now. But he did launch that one with China. And to be fair, The tariffs he put in place were actually then just continuing also under the Biden administration. They were never removed again. And in retaliation back then, China was instituting tariffs on select U.S. commodities, including some of the agricultural commodities. And the U.S. have not been able to overcome that.
So I wanted to circle back to something you said previously, and this is a statistic that you talk about kind of frequently. It's TEU miles. So can you explain to our listeners why that matters, why it's important?
Yes, you can say historically in this industry, we always just talk about TEU, and that makes sense. I want to move 5 containers from point A to point B. If I then want to move 10, I double demand. Sounds easy enough, right? Maybe let's move away from the seaside and just think about it on the land side. Let's say I'm moving 10 containers from Los Angeles to San Francisco every week. Now, if I then suddenly want to move 20 containers up to San Francisco, I would need twice as many trucks, right? That's fairly logical. But what if I don't want to do that? What if I still just move 10 containers, but I don't move it to San Francisco? I move it to New York by truck. Then obviously I'm going to need a lot more trucks if I want to move the same amount of cargo every week because I need to use the truck for a longer time. Same thing on the sea. So with the advent of the Red Sea crisis, what happens then is from Asia to Europe, it's about 4,000 miles longer to go around Africa in each direction. So if we are measuring not just TEU, but take into account the distance, and we use nautical miles over in shipping, so that's why we call it TEU miles. We have to measure it in that way, and that is why all during 2024, when we looked at TEU miles, we saw growth rates of 25 to 30%, because it's really a measure of the amount of work that needed to be done by the ships compared to what we were used to. And if you look at other shipping sectors, if you look at tank and bulk, for decades, the standard has been to measure global demand in ton miles for exactly the same reason. It's just in our industry, that has never become a standard, which to me is somewhat baffling because measuring global demand just in TEU doesn't really make a lot of sense.
Yeah. Okay, that's interesting. Thank you for clarifying that. So do you think we should get into the tariffs? Is it time for that? Are we ready?
We might as well tear into it with the caveat that no matter how much we talk about tariffs now, things might change an hour from now, a day from now, and a week from now.
Definitely. Yeah, we're seeing everything change so fast that it's impossible for us to be fully up to date, no matter how hard we try. Based on what we know from the last week, over the weekend, what are we seeing right now from shippers, for example? Like, what are they thinking? What should they be thinking? How are they responding to the tariffs?
Yeah. The way they are responding, I'm increasingly beginning to see that, and that's also how they should really be responding. That is by remaining calm. Because maybe a good way into this is to say the problem is we don't know how this will change. I mean, we know what the US has announced. That is factual. We know China has announced 34% tariffs. That is also factual. That's all we know for now. Then we have heard some countries in Asia saying that they're not going to retaliate. We've heard the EU say they will retaliate, but we haven't seen anything yet. But here's the problem. If you look at the way the US has been conducting the trade war over the past 2 months, it has also been in fits and starts. Remember back when first there was an announcement of, I believe it was 20% tariffs on Mexico. It was implemented. And 3 days later, it was again removed because Mexico then got a postponement. The problem from a shipper perspective is for those shippers who were unfortunate enough to get their cargo imported in that tiny 3-day window when the tariffs were on, they're stuck with that bill, tens of thousands of dollars for some of them. If you had moved 1 day earlier, it would be nothing. 2 days later, it would be nothing, just because you were caught in that small window. And all the shippers have learned from this. They have learned that you cannot trust the US rules to stay fixed for any reasonable period of time. They might, but you don't know. And that's why a lot of shippers are right now taking a step back and say, calm down, take a deep breath. Don't ship anything right now that you don't absolutely need to move. Because yes, you might be slapped. Let's say you're shipping out of Vietnam. If my cargo gets on a vessel a day and a half from now, I'm going to be slapped with a 46% tariff. But there's no guarantee that Vietnam won't reach an agreement with Trump, and then on Thursday he's going to announce 0% tariff or 10% tariff on Vietnam. So most shippers They take a breather and say, let's wait just a few days and see how this shakes out. That is the sensible thing to do because that is the way the US has been operating. Now, from a supply chain, this, of course, is going to create some challenges. There are plenty of goods in the inventories in the US, so that some of the importers are holding back a few days or a week in moving their goods is not really going to change the situation. There will still be plenty of goods in the stores. That's not really an issue at all. But from a supply chain perspective, this could be an issue. If sufficiently many shippers say, let's take a step back, take a breather, don't move anything just for a week and see how this shakes out. That is going to lead to significant underutilization of vessels departing here over the next few days. And those vessels are, of course, sailing, have underutilized. That's the carrier's problem. But let's say everything then becomes more normal next week and shippers start to move their goods. That means that next week, not only do they move their normal goods, they also move these goods that right now they are postponing. So we could get this yo-yoing effect. So this week, really poor demand. Next week, suddenly all ships are chock-a-block full, which would then also cause yo-yoing over in the freight rates. This makes everything very, very unpredictable. If we look slightly more medium term apart just from the next few days, the next question I see a lot of shippers asking themselves and also being asked is, will this cause them to change their supply chains? And right now, the answer is a very clear no. Of course not. I might be slightly cheeky here and said you should be, if you want to play dice in a casino, fine. You can also change your supply chain right now. But again, we don't know what the landscape will look like a month from now, 2 months from now, 3 months from now. A supply chain is something that should work relatively smooth and fine, like a well-oiled machine. Sure, not always well-oiled, but that requires you know what is the landscape you're operating in, and right now we don't, which means making longer-term decisions on permanently changing your supply chain makes absolutely no sense in the current environment because you don't know what you need to deal with. Again, a practical case in point. During COVID and during the first Trump administration, companies, especially US companies, were told, move out of China. So that led to the whole China plus one. And guess what? Some of the companies moved out of China. They moved to Vietnam, Cambodia, Thailand, countries that are now being slapped with 40% tariffs. So they actually did, to some degree, what they were encouraged to do by the first Trump administration. Now they've been penalized for that very same decision. So all of the shippers right now are in a situation where they have no rational basis upon which to make a decision. How are they going to change their supply chain? That means even longer term. I don't think anyone in their right mind can make a decision in terms of, am I going to move my manufacturing location? Doesn't matter whether we're talking moving it from, say, should I move from Vietnam to India, because we don't know what the tariff situation will change into, but much less also a decision, should I move manufacturing to the US? As long as all these tariff rates are in complete flux, I don't see anyone realistically changing their supply chain, their manufacturing locations, or their sourcing locations. They might make short tactical decisions right here and right now, but any long-ranging decisions, everyone would be holding off on those until there is a more stable situation.
Yeah, it's definitely a wait and see kind of game right now because every country basically is impacted. So what's the point of trying to run some analyses on let's move it here or there because you don't know where it'll end up.
And maybe let me add one thing, because there might
Sure.
be some of the viewers or listeners out there that also have seen headlines. I've seen them as well. You are seeing companies saying, well, we're going to move production to the US. These headlines absolutely do exist. When you then start to look into it, the way I've seen it so far is they tend to fall in two categories. Either it is companies saying that, yes, at some point in the future, we're going to invest X billion dollars, which is an easy thing to say, but it doesn't translate into that they will actually do it. It's just something they are saying as an intention, but there's no actual action. Or we saw, just to put a practical example on it, there was a company in Denmark that said, well, now they're going to move some of their production to the US. But if you really look hard into it, it turned out that, well, they have a production facility in Denmark. They also have a production facility in US already. Now, around 4% of what they were making in Denmark also made it to the US market. So fine, they're just going to shift those 4% over to the US, which in the greater scheme of things is not really changing anything at all. So again, back to my point from before, apart from a lot of rhetoric out there, I don't see anyone in their right mind making long-term decisions on changing their supply chains or sourcing patterns, as long as everything is as much in flux as it is right now.
Yeah. And that story sounds like it's not net new infrastructure, it's maybe developing further what they already have in the US.
Yes.
What other impacts have we seen or responses from other countries? I know you've got an eye to the landscape in Europe specifically. Have you seen any responses there?
Yeah, if we look at Europe, Europe has not responded with anything yet. I mean, here we are. It is now Monday afternoon, European time. There still hasn't been any firm commitment from Europe what they're going to do. Politically, to me, it seems like Europe is indeed going to respond. I know there might some that might be disagreeing, but I think they're definitely going to do that. And I think what we should contemplate here is keep in mind the trade war that is started here by the US is focused solely on goods. And when you see some of the stats coming out from the US administration, it's about the trade deficit in goods. What is completely absent from this discussion, also from the US administration numbers, is the trade in services. When we say services, what do we mean? Well, that's your Netflix account. It's when you're paying Google for a Gmail account. It is your Microsoft Office license. All of these different things are services. And if you look at services, US is not having a trade deficit. US is having a trade surplus with the rest of the world to the tune of almost $300 billion a year. These are not included in the deficit numbers that the US administration wants to address. I don't know what the EU will do, but I would suspect that part of the retaliation from the EU might actually focus on these services rather than on goods.
And we've also seen, I think the French president was saying that companies should pause investment in the US. And so that might have some impact on the recent CMA announcement to build infrastructure in the US.
Yeah, over the last couple of weeks, I think it's been a good lesson in companies should be very, very cautious to interject themselves publicly into this geopolitical feud that is going on right now. Let me give two examples. One would be CMA CGM. First, we see CMA CGM being in the Oval Office, pledging a $20 billion investment and flagging some ships into US flag. Seen on itself, that seemed like an easy win, in this case for CMA CGM, to be on the good side of the Trump administration. The problem is that have now led to a situation when the French president is saying we should pause investments. That clearly places CMA CGM in an extremely uncomfortable position. I don't know. I would guess that CMA CGM would try to avoid any public discussion on that topic for the foreseeable future, because otherwise they would be forced in public to choose between the American president and the French president, which of course is not a position you want to be in as a company. You want to be able to serve everybody. I think that's a good lesson of it's dangerous to try to go out publicly in politics. The next thing that I also find extremely interesting, remember a month ago when we saw this massive deal with Hutchinson and basically MSC becoming the world's largest terminal operator. Increasingly, it seems the wheels might be falling off that wagon over the last couple of weeks because it appears that the Chinese government is actually not pleased with that deal and might do whatever they can to put a spanner in the works, which suddenly places MSC in a somewhat uncomfortable position. Not as much of a political cross pressure as CMA CGM is faced with here, but still, it shows the risks right now that the geopolitical reality is a very, very difficult one for companies to operate in.
Yeah, it's a tough spot to be in for sure. Let's circle back a little bit to market predictions given all the uncertainty with the tariffs. Does that change what you talked about at the beginning of this podcast episode? Is there any additional context you want to throw in?
There is indeed additional context. And just to put the baseline in, the baseline before all of this trade war hoo-ha started, the baseline is we are going to go around Africa for the foreseeable future. That will soak up capacity. The baseline was 2.5–3% demand growth this year, which would mean a global supply-demand balance this year that was worse than last year, but definitely better than just a balance. We will still be in a tight situation. The trade war, the magnitude of the trade war we have now, no one has the slightest clue where this is going to lead. It might be that there are agreements falling in place over the next week and a lot of this is retracted. Fine. Or it might be that this continues, and at the opposite end of the spectrum, I won't hesitate to say we should also dust off our plans. What did we do during the financial crisis back in 2008, 2009? And keep in mind, at that point in time, global container demand declined 9%. If we take that into account this time around, no, then we're not going to have a strong 2025. We're going to have an absolute crash on the container shipping markets. Both are within range, and it is completely unpredictable because it all depends on how the political game will play out in terms of the trade war.
All right. A lot of uncertainty, a lot of wait and see. But it sounds like next week we'll probably have maybe some updates here, whether that's things are staying the same or, we're seeing some responses globally. But
Yeah, and you can say wait and see is the right one because there is this massive uncertainty. I mean, right now your choice is either, well, let's wait and see and play it tactically, or make a bet knowing that if you are wrong, it's going to cost you a fortune.
yeah. All right, Lars. Do we have maybe more positive notes to end on here?
We do.
I don't want to leave our viewers sad.
I can't remember if we talked about it before, but I think the positive note to put out there is the phasing of the new alliance services are going extremely well. Reliability numbers are looking good. Now, mind you, they are not perfect, they are not stellar, but if we look at some of the new services, they are performing better. And here I'm not just talking Gemini, I'm also talking Premier Alliance, I'm talking MSC's new services. They are looking better than the regime we came from. So at least the one positive news we have out there is we might be getting back on track to improve some of the timeliness of services out there.
All right. I like that positive news. I think that's good for our shippers, good for everyone, really. All right. Well, thank you all for tuning in to this week's episode. Please be sure to subscribe wherever you get your podcasts, Apple Music, Spotify. We're also on YouTube. And we make these episodes every Monday, 8 a.m. Central Time. And we'll be here next week. So talk to you all soon. Thanks, everyone.
Have a great week.
Thanks for listening to Supply Chain Secrets Podcast, presented by Nice Shacks. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.